Hello, good morning everybody. Welcome to the Gold and Silver Club end of week review. So happy new year to everybody who we haven't spoken to in the last couple of weeks. Great to see everybody back, and we've got a lot of movement in the gold and silver markets this week, certainly even today, so plenty to discuss with you all this morning. Okay, so first of all, today we'll be reviewing the latest developments in the commodities markets and analysing the week's performance. So the live session will cover end of week summary for gold, silver, oil and commodity currencies. We'll look at the top trades of the week, live market commentary and technical analysis, the week ahead, so key events looking forward, and Q&A, and we'll also be talking about yesterday's Federal Reserve announcement. Okay, so headline news really yesterday. Let's go through that. So we can see actually gold right now, price of gold has come all the way down, and we're actually currently just testing a key level. We're at 1628 at the moment, $1,628 per ounce. Now that has fallen quite some way over the last 24 hours. So we've fallen down from about 1680, so it's quite a significant drop. We've moved about 500 points to the downside, or $50. And the reason for this, so gold price fell on FOMC minutes. So yesterday evening when we had the Federal Reserve announcement, precious metals declined while the US dollar shot up after the minutes of the Federal Reserve were released. So the policymakers are growing wary of asset purchases and indicated that they may end their 85 billion monthly bond buying program in 2013. So essentially they're talking about ending QE3. So US officials thought that it would probably be appropriate to slow or stop purchases well before the end of 2013, according to the minutes. The announcement caught the market by surprise following gold and silver upbeat movement, certainly earlier on in the week after the deal in Washington to avoid the fiscal cliff. So really the big question now is, guys, what effect will this announcement have on gold and silver prices throughout 2013? So I'm just going to read you some information just off my Reuters news feed as well. So gold has actually gone to test at the moment 4.5-month lows currently. So we're actually lower than the low we put in December. Just this morning we're at 16. We tested at just above 1626. So very interested at the moment to see what price action we're going to get. We're just actually coming to a key price action level right now. So we extended losses on Friday, falling 1.6% to the lowest since late August. And yes, after the Federal Reserve minutes indicated growing concerns over its monetary stimulus program. So this is to do with quantitative easing for those of you who are new to this. So essentially they are potentially looking to stop QE moving into 2013. So this will maintain pressure on long-term. So the Fed stimulus measures, which maintain pressure on long-term interest rates while stoking fears over inflation, have been a major driver of higher gold prices in recent years, which of course a lot of you know from being on our webinars. So this could be quite a major move. Certainly we're seeing a knee-jerk reaction at the moment. Probably stop losses are getting hit. We're getting quite a sell-off at the moment, so we've come down, and we'll talk through that very shortly actually in our live market commentary. We'll go through some of the top trades of the week also. So just a little bit about myself and Nick for those of you who are new to the Gold and Silver Club weekly review. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the biggest financial markets in the world, Forex, gold, silver and oil. I trade thousands of individuals to become independent traders, successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. This is Nick Kalsi, co-founder of the Gold and Silver Club, professional trader, investment analyst and speaker. He began his career within private wealth management. Nick is joining us on the call at the moment. We'll help answer any of your questions. He started his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through his first-hand relationships with some of the world's most successful traders, he's discovered the formula, mindset and tools that give any individual the definitive edge to make money in any economy. He also regularly writes for a number of global business and financial publications and appears frequently on financial television. In fact, this is ourselves just recently on Swiss TV giving our opinions on gold and silver. This is just a few of the publications we've done recently. Global Banking, Finance Review, this is International Life Magazine, and the South African, for those of you who live in London. Okay, so that's a little bit about us at the moment. So, yeah, question we put out there, what is the gold price doing right now? Well, we're currently at 1631 actually. We just bounced off a key level, which I'm going to show you very shortly, and we'll see whether the momentum is maintained. Obviously, we've got non-farm payroll later today as well at 1:30. Very important news announcement. So a lot of news-driven movement going on in the markets at the moment. Some of the fantastic trades that we've had certainly over the last couple of days have also been on the commodity currencies, which have just represented some fantastic profits and risk to rewards. And we'll talk through that very shortly, okay? So top trades of the week, guys. So we'll just go through our top trades of the week using price action. So trade that we just took yesterday, actually, this was nice trade setup. So you can see here where we've come to a key sort of resistance level, also a Fibonacci level. We've had a good candlestick set up, and we've had a nice entry. So 1.0510 was the entry on this. You can see where we got in to that just yesterday at the top there, dotted green line, and this is where we've had a nice sell short position, and we're actually still in this trade at the moment. The trade is still coming down, but as of this morning we were in profit to 90 points. So very simply, from a risk of 20 pips, of a risk of 20 pips on the trade, just trading at one lot, $200 risk, and we're currently over 90 pips. Actually, it's somewhere in the region. I have to measure that very shortly. About 120 pips in profit at the moment. But so for 20 pips to risk $200 to make £900 dollars profit. So it's a 4.5 to 1 risk to reward ratio. So we risk 20 points to make 90 points, and that was a great way to actually trade the sell-off that we had on gold and silver yesterday. The reason being is because the risk on the trade was quite tight. We came to a resistance level on Australian US dollar, and it represented a very nice move, especially once the Federal Reserve did their announcement. We started to see good momentum to that trade, and were able to just follow the trade down with our stop loss as well. So very nice risk to reward on that trade. That was Australian US dollar. We also took a very nice trade on gold. This was just after Christmas. This was on the 28th of December. We can see the 1653 level was being tested a lot of times. It was holding this level, quite a strong area of support over the Christmas period. You can see over that period the markets moved very range bound. We didn't get too much volatility, and it was a nice entry point, and very simply be able to capitalise on the beginning of January. The first few days of January, certainly up until yesterday when we had the Federal Reserve, we had a nice swing to the upside, and we actually hit our profit target of 1691 Fibonacci level and came out for 378 pips. So with that, we had a risk there, slightly more than you'd have on Forex. You had a risk of 50 points, so at one lot $500, and we came out with 378 pips. So a very nice reward on that. So $3,780 profit from a risk of 500 for a 7-to-1 risk to reward. So a nice trade there that we managed over the Christmas period on gold. And also, Australian dollar CAD has been very range bound, follows price action very well. We had a level, key support level, tested just before Christmas, actually. On Christmas Eve, it was retested again, held nicely. Again, fairly nice risk to reward on that, so 20 pip risk, so at one lot, $200 risk, and we came out at our profit, managed to hit our exact profit target on that, 97 pips, so $970 profit for a 5-to-1 risk to reward on Australian dollar CAD. Okay, so those are some of our top trades over the Christmas period and certainly of this week. We've actually entered some fresh positions as well just of yesterday, which we'll talk you through, particularly on the commodity currencies. So we will switch across very shortly to talk through some live market commentary. Okay, so we'll just do this, guys. We're just going to switch across to my other screen here. Okay, great. So here we go. Actually, let me first just I'll just bring you on to Reuters and see. You can have a look what is actually happening here at the moment, and what the US dollar did yesterday. So this is the announcement that just came through this morning. You can see here the US dollar index absolutely shot up yesterday. So on the back of the Federal Reserve announcement, we had a massive move to the upside US dollar index, which has affected all the other currencies as well, which are pegged to the US dollar. And that has caused some strong volatility, and we'll show you that very shortly. Let's just have a look at the latest news just coming out as well, just regarding gold this morning. Okay, so yeah, just for some of you, there's quite a few latecomers on the call, so we'll just quickly update you. So we've had a very big fall in gold over the last 24 hours, especially since last night's Federal Reserve announcement. So gold is currently at 4.5-month lows. Gold fell 2% to 4.5-month low on Friday after minutes from the US Federal Reserve highlighted increasing concerns over its highly stimulative monetary policy, knocking stock markets lower and boosting the dollar. So fears that central banks' money printing to buy assets will stoke inflation had been a key driver in boosting gold, which rallied to an 11-month high in early October after the Fed announced its third round of aggressive economic stimulus, or QE3. And now it's fallen to its lowest level now since August. 1629 it was just this morning. We're bouncing off that level a little bit at the moment. And gold currently down 1.9% in today's session. So this is very much due, guys, to the Federal Reserve hinting that they may stop quantitative easing. And so we'll take a look at the markets now. We've had some great setups really on the commodity currencies. It has really been for us all about the commodity currencies over the last 24 hours. So the commodity currencies you can see here, Australian US dollar, we actually shorted. We had a nice great short position on this trade. You can see here just actually coming down, so it's over, it's 100 points coming down, downside there. We had, you can see that sort of doji formation on the candlestick, where the price starts and closes at the same sort of level, or inverted hammer formation that started to form. We can see there where we've basically come up to this level of resistance, Fibonacci level, and it's been a nice opportunity to actually go short, especially based on the Federal Reserve announcement that we had. So this has been quite a quick profitable trade. We came down to our initial profit target just down here for 91 points. We are actually still managing to catch this trade as it goes down and targeting these lower price action levels just down here. We'll see if we get to those, but if not, we'll certainly lock in profits at this 1.04184 level on Australian US dollar. USD Canadian dollar, what a nice move on USD Canadian dollar again. We've had a sell-off which came to close to fib level as well, but a level of support for those of you who use fib fans, or you also use trend lines. We had a nice level to get into yesterday. It was retested several times, and then we obviously had the Federal Reserve news come out last night, and we had a big move on this. So we've had about 77-point move to the upside USD CAD. So USD Canadian dollar essentially follows the US dollar index the majority of the time. So if you're going to get a big move to the upside on US dollar index, gold and silver will be selling off, USD Canadian dollar will be rallying, and we've seen that exact move at the moment. So really, this has presented a lovely opportunity to go long on USD Canadian dollar, and we'll see whether that then gets back up to this resistance level here of around about 0.99430. You can see we've got a whole level of resistance just around about this sort of level here, which I would imagine a lot of traders will be targeting to the upside for USD CAD if the momentum continues. This whole area here is potentially sort of level of a little bit of congestion where traders may start taking profit on their longs on USD CAD. New Zealand US dollar, so exactly the same story really as Australian US dollar. We've sold off largely over the last 12 hours, really, well, since last night. You can see here we've actually come down quite a way, so sold off around about 120, 130 points. We're now starting to come and test some price action levels again here, so we'll see what happens. That'll be very interesting. Obviously, guys, you've got non-farm payroll this afternoon, so you do want to be very cautious about entering any new positions this morning. 11:15 at the moment, so you've got a couple of hours until non-farm payroll, but that will be a big decider in the to end the week, really, the momentum of commodity currencies and commodities as we come towards the end of the week. So let's turn our attention to gold and silver, which let's have a look here. And this is what we're talking about. So we can see here with strong accuracy, gold's actually come down to 16.26, and it's just pretty much bounced off that level exactly. So obviously a lot of buy orders at 16.26, or a lot of profit being taken on the sell short side at 16.26. So if you let's have a look. Okay, so we've had a bounce on that, about 50-point bounce, or a $5 bounce just off that level at the moment. You can see here that we are sold off quite, we've had an extreme sell-off over the last 24 hours or so on gold, certainly from that high of 1690. We've had an extreme sell-off, so in the region of about 645 points. So if you've been able to actually sell off that 1690 Fibonacci level, certainly some nice profits in and around that that level selling short. Let's have a look. So this was 1690. This was our take profit target, really, guys, that we were discussing earlier, where we take in the trade the 1650 level, and we came out at 1690. Really, we wanted to see whether we would be able to break out towards 1700 and get back up to 1721 area. We didn't manage to do that. Perfectly happy to take profit at 1691. We could see yesterday we had a test of 1674, broke through it, test of 1660, broke through it, and we've come all the way down and to test 1626 at the moment. If the price was to continue selling off to the downside, the next level, key levels that we would be looking at are going to be these levels of, 1616's level, but certainly 1580, well, actually you can't see it on this chart right now, but 1585 is a key level to look at if the price was to break back towards 1600. So 1600 would be a level certainly where you may see some profit taking on short sellers, and also new traders, new buy orders coming into the market around about 1600. A break of that, 1585, has typically been a key price action level. And of course, the low of last year, which didn't get broken, was that 1520 level, which didn't get broken throughout 2012. So very interested to see what gold's going to do next, whether we're going to have a retest and a bit of a relief rally now back towards 1660 level, but all eyes really on non-farm payroll this afternoon at 1:30. Okay, so here's silver. Silver, same story really. We had quite the sell-off yesterday. Towards the beginning of the week we had a nice rally on silver. Let's just take that out a little bit. You can see here where we rallied. Had consolidation pretty much throughout this whole Christmas period as well, between really the 29.50 level all the way up to around 30. We broke out of that just at the beginning of this week, so we had a breakout to the upside, came up to test about 31.50, just shy of 31.64 fib level there. And we've now, based on yesterday's news, very much a news-driven market yesterday and today as well, with non-farm payroll. We can see here with silver where we've sold off quite significantly. In fact, we've been in a downtrend really on silver since we crossed all the way back in the end of September, where we got up to 35. We're now about 600 points off those highs. Okay, and let's just take a look at some of the moving averages here as well, so we see what's going on. Okay, so silver at the moment, silver is back below the 200-day moving average. It's below most of the key moving averages, in fact. So silver, you'd certainly want to wait before entering into some long positions at the moment. Taking our eye to gold. Gold at the moment, again, gold's back below the 200-day moving average. So really, shorts are definitely in control of this market at the moment, and you can see here, in fact, where we've broken below this this key level 1630, the low which we put in. We haven't been that low since August last year, so be very careful about gold and silver at the moment. Very interested to see if we're going to get, as I said, a relief rally today, or whether the sell-off is going to continue and test these lower levels of 1580, which would be the first sort of key level we'd be interested in being supported, and then we're going to be looking for 1585, and then we're going to be looking towards the 1530s if that does not hold. Okay, and we're going to Australian US dollar. So Australian US dollar is sold off, but we had a really nice sell-off there actually, because we sold from a nice key level of resistance, and we're still way above the 200-day moving average there. Look at USD Canadian dollar. USD Canadian dollar putting in quite a nice rally over the last two sessions. As you saw, the US dollar index has certainly had a massive move to the upside over the last 24 hours, which you can see reflected in USD Canadian dollar as well. So we've certainly had, you can see there where we've had some nice rally there, just off supportive sort of level, just on USD Canadian dollar, which we showed you on price action. So guys, really be very cautious on gold and silver at the moment until non-farm payroll this afternoon. It's going to be very interesting to see how this pans out. In terms of the moving averages, yeah, you can see that we are below some significant moving averages, so the short sellers are in control of gold and silver currently. Okay, so that really wraps it up for just some of our live market analysis there. We'll just turn our eye very quickly back to news feeds here, and to just bear with me, and I'll just bring you back to my presentation, and we'll also talk about the key news moving forward. And here is just the US dollar index here, so you can see the big spike that we had yesterday, and even overnight during the Asian market as well, where we've had a big move to the upside. And obviously news feeds is a key part of how we trade the news, and certainly we'll be utilising this afternoon for non-farm payroll. So if you do have access to such news feeds, use them, because they can make all the difference to your news trading. I know a lot of traders, they don't like trading the news, but I would, if you've got the right news feeds in place and you can react to the news as it comes out, you've got a solid strategy. Trading news is extremely profitable. So guys, we will turn back to our presentation now and just talk you through, on that note, the news coming up today and later this week. Okay, so let's have a look. So the key news to look at moving forward today, obviously at 1:30 p.m. we have non-farm payroll, and for those of you who may not be completely au fait with non-farm payroll, this measures the change in the number of people employed in America. So it's the job creation is it's a big indicator of consumer spending, and it's basically it's the measure of those employed in America. So non-farm payroll, apart from those who are employed in farms, hence non-farm payroll. But essentially what we will tend to see, if the employment figures are very negative, i.e. less jobs have been created, more people become unemployed, this will typically be negative for the US dollar index, in which case we could see a spike up or a relief rally in the commodities, gold and silver in particular. If the data that comes out is very supportive of job creation, more jobs have been created, more employment has been gained, you will tend to see a stronger US dollar, and we'll get even a further sell-off on the commodities and the commodity currencies there, Australian dollar, New Zealand dollar, gold and silver, pound dollar as well, will all be selling off. That's typically what you would expect. The markets are not always logical, but that is what you would expect to happen in those two scenarios. And if the job count has changed very little, then you're not going to see as significant a move on the markets. Okay, so that is the key news to look out for today, guys. 1:30. Make sure if you are trading the news that you've got your live news feeds that you're able to trade just based on your strategies and key price action as well. Don't get into any trades just based on a whim, or don't get into any trades which are not following the rules of your strategies. Okay, so Monday, the next trade news we have, significant news, next Monday, 7th of Jan, which affects Canadian dollar, Canadian PMI. So this is going to measure the activity level of purchasing managers in Canada, and higher than expected readings should be taken as bullish for USD CAD, while a lower than expected reading should be taken as bearish for USD CAD. So that's important if you're trading the commodity currencies, USD Canadian dollar, if you've got positions on that currency pair. Next Thursday, got GBP interest rate decision, very important for those trading cable and pound dollar. So the Bank of England Monetary Policy Committee members vote on where to set the rate. So traders watch this interest rate changes very closely, as short-term interest rates are the primary factor in currency valuation. So a higher than expected rate is normally bullish for the pound, while a lower than expected rate is normally bearish for the pound. And we've got later on in the week, next Thursday, the euro interest rate decision. So obviously very important for those trading the euro. So members of the ECB Executive Board and 16 governors of the Eurozone central banks will vote on where to set this interest rate. Again, a higher than expected rate is bullish for the euro, while a lower than expected rate is bearish for the euro. So that's important because euro is still fairly correlated to the commodity prices, gold and silver. You would have seen that the euro sold off significantly over the last 24 hours as well. Next Friday we have the Chinese CPI. Again, this is important because a higher than expected reading should be taken as bearish. While a lower than expected reading should be taken as bullish, while a lower than expected reading should be taken as bearish. This is again important because the Chinese economy is very a strong correlate to commodity currencies again, and also gold and silver. So the strength of the Chinese economy does affect the prices of commodities significantly as well, particularly if you've got a stronger economy there. They're huge buyers of gold and silver in Asia. We tend to see that's been supportive of the commodities, whereas if there's weakness in the CPI, we would tend to expect weakness also in gold and silver prices. And again, next Friday, 11th January, 1:30 p.m. is the CAD trade balance. So again, if you're trading USD Canadian dollar, this will affect that trade. Higher than expected readings should be taken as bullish for the USD CAD, while a lower than expected reading should be taken as bearish. And again, this is important because the CAD is correlated inversely to the gold price. So that's some of the major news to be looking out for. Okay, so we're going to be looking at that. And any questions, guys, please do post in the chat. We've got a few questions there that we will look at. Actually, let's have a look at those now. So, okay, so Mohammed, question from Mohammed there. Where do we see the last low on gold? I think that's your question. Where do you see the gold, the last low? I presume you're asking just on the chart, Mohammed, there, where the last low of gold was, and that was, in fact, we've just tested a key price action level, 1626, this morning. This is the lowest level we've got to gold in the last 4.5 months, and the previous low before that was circa around 1635. So these are important levels to look at. Okay, so is there a relation between Australian US dollar and gold? Yeah, absolutely. There's a strong correlation between Australian US dollar. It's one of the commodity currencies. Reason being is that they're a heavy exporter of gold, and their currency is heavily correlated to gold. So you can see there where we've had the big sell-off. You want to look at your charts, the big sell-off in gold over the last 24 hours. Australian US dollar has also had a big sell-off. The main difference was that the risk to reward in Australian US dollar was much better than the risk to reward of shorting gold. So we were able to catch a 5-to-1 risk to reward on Australian US dollar, just simply from last night's Federal Reserve and from testing a key level of resistance. You'll find the same thing for New Zealand US dollar, also correlated to gold price as well. So you see there's a big sell-off in New Zealand US dollar as well over the last 24 hours. Okay, so Harold, just asking a question there. Obama creating new jobs now. Very good as he sent Romney to politically cemetery. Okay. Yeah, absolutely. We're very interested to see what happens this afternoon, whether there has been a lot of jobs creation over the last month. Certainly, if there has been, definitely expect further downside for the commodities, and you will see that US dollar index will further rally if there has been a lot of job creation. That's what you would normally expect. To obviously follow your risk management, follow your trading strategies, and follow good risk to reward on those trades. Yep, excellent. Yeah, great. Good to see you, Black Cat. Yeah, Happy New Year. Okay, so I have another question there. Okay, Mohammed, I might need some clarity on that. Just your report. Yeah, guys, if there's any other questions, guys, do send them through as well. Mohammed, you're just talking, I'm not sure which market you're talking about being at $1,200 per ounce, but don't worry, that's fine. We've just covered off a few of your gold and commodity currency questions there. Okay, fantastic. So, as we, today's going to be very important. 1:30 p.m. non-farm payroll. It's quite an important, certainly news announcement. Significant volatility will no doubt be caused at 1:30. So, guys, if you would like to learn more and to learn more really about how to trade the gold and silver club way and join our mastermind program. You can very simply do that via application only. It's a very it's very much an immersion program over 12 months where you will be very heavily supported and also learn the 5 key gold and silver club core strategies. So today we're just really covering tip of the iceberg. We can't go into full detail on the indicators we use and all the risk management and the different price action levels we're using on the webinars, but hopefully we give you enough that will help you with your trading to some degree. But if you'd like to do that, you can very simply just go to our website. The application is just on our website, www.thegoldensilverclub.com/course-form. So you can just go to our website at the top there, learn to trade, fill out the application form there, okay, and that is your application form for the coaching program. So if you have any questions at all that haven't been answered today, or if you've not had a chance to ask your questions, feel free to send us an email, office@thegoldensilverclub.com. You can call us. I know some of you are on the webinar here from either Asia or based in Europe. Our Asia number, guys, is 852-8191-0403 for our Asia office. And for our UK office, it's 0207-193-0403. Okay, and also, of course, subscribe to our newsletter. You'll be kept updated with our weekly newsletter. That's free. You get updated with gold, silver, and commodity currency news, live market analysis, and prices, and also be kept updated of the latest webinars. So do make sure you sign up to that as well. Okay, excellent. Great. Well, guys, that draws us to an end. Great to be back here after the Christmas holidays and to kick off 2013. Wishing you a very successful week with your trading, particularly today as well. Hope you all manage to catch some of those profitable trades, and we'll catch more over the next week. And we'll see you back here the same time next Friday at 11 o'clock, guys. Okay, so have a fantastic week. And that's Nick and myself signing off for now, guys. So take care, and we'll speak to you then. Cheers. Bye-bye.